We had a fantastic 2020 last year, and now we're into 2021. Now we're getting a lot of questions from clients and folks asking, okay, well, we had a fantastic year. That's great, but how do we protect those gains? What do you see happening in 2021? So those are the things we're going to cover in this episode. My name is Brian Cannon, and welcome to Markets in 5. So if you look at the market over a long period of time, it goes in what's called secular trends. And these secular trends last anywhere from 12, 15, sometimes 20 years in duration on average. So currently we're only 6 years into this secular uptrend, this bull market that we're in. I think there's, historically speaking, a long runway ahead of us. And I know it's hard to kind of imagine that, especially in today's environment, but it's also hard to imagine the stock market making new highs as we're in the middle of a pandemic. So not always does it make sense. So you just have to play the numbers. So in this next chart, you can see this is a monthly chart of the S&P 500. So it takes the monthly performance and plots it over time. And if you look here in the green circle, again, we're at all-time highs, starting to pull back a little bit here. I do think that we are going to have a pullback based on not only this chart, but a number of different indicators we look at that are kind of waving a little sign of caution out there. But the pullback I would anticipate would hold this blue line. And if not, then our next level of support would be this next blue line. So those are what we're looking for to hold. But at the same time, if the market does roll over, we'll, of course, make the decisions to protect. So in this chart, it really gets into the specifics of what we do. So again, we don't take any one indicator and make a decision. So we use what's called the weight of the evidence. These are several indicators that we use to help us make that determination. However, there's lots of others in the background as well. But so when we look at the trend line here in the blue, of course, we want the trend. We want the market price to hold that trend line. So that's important. And then secondly, the RSI, which is a relative strength index, it basically is a measure of momentum in the market. When the momentum starts to fade and drop below that 50% line, and it coordinates with the fact that trend line gets taken out, those are two of, I would say, our strongest indicators to kind of say time to back the risk off, because essentially we don't know if it's going to have a little pullback, like in this case, and consolidate before it heads up on its next leg. Or we don't know if it is a serious breakdown that can cause serious damage to your portfolio. So we don't take the risk. Currently, we are holding the trend line, although it's close, and the RSI is still above 50. So the next several days to weeks will be very indicative of what we're going to see in the market here. This last chart is what's called the Volatility Index. And as you'll see right here, we've had a breakout in the volatility. So when the volatility index rises, that's a measure of fear in the market, right? So when it rises, generally the market drops. So it's broken out to all new highs here from the recent trend. So again, just an early warning sign. So based on the VIX and based on the trend line here being very close, I would say we're on high alert right now. I think ultimately it's going to be a short-term event. I think it's going to provide a really nice buying opportunity, but at the end of the day, we don't know. So we want to be prepared and we want to protect. So pretty much all I've got for this segment. Feel free to reach out if you have questions. Feel free to share this video with your friends and family, and anybody else that you feel like might have an interest in learning a little bit more about what we do. But we'll see you in 2 weeks. But that's our Market in 5. Take care.